You're live.
Hello, everybody, and welcome to this week's International Market Recap done by Metastock. My name is Hunter Smith. Let me get the legal part out of the way real quick, and then we'll get right into this fun week. This demonstration is designed to instruct you on using Metastock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. We shall have no liability for any investment decisions based on the use of our software, any trading strategies, or any information provided in connection with the company. Now, this lovely episode of the Market Recap is brought to you by Tito's Vodka, the only way that we could make it through a week of trading. I'm just kidding. We're not really sponsored by Tito's, but it has been a heck of a week in the market. We were actually just going to bring you a video of me running around in circles with my hair on fire, but we decided to bring in an expert to kind of cover some of the markets and give us some insight into what has happened. We are pleased to have Mr. Gary Burton in today with us, doing this international market roundup. He is certified with the International Federation of Technical Analysts. He has many accreditations to his name. He's been trading for a very, very long time. He created the Haguro method, which is a very, very popular system within Metastock software. And I'd like to welcome him in here today. Gary, can you hear me okay? Let's get your mic unmuted.
There we go.
There we go. Perfect.
Well, good afternoon.
How are you doing today, Gary?
I'm fine.
Wonderful.
And mostly in cash.
Well, I'd imagine you would be.
No, it's been, as you said earlier, it's been an interesting week. Today I'm going to run through some charts that are using the Refinitiv side of Metastock, the icon side. Mm-hmm. So the charts will look a little different than there are Metastock charts, but all in the one package. A very good part of Metastock that I think people should explore a little further. But so we'll run through some charts today, and we can see we've got the S&P 500 up there.
Yeah, S&P has been, we're down 63 points on the S&P.
Yep.
So far, and it's a mirrored with the Dow down 400 points. That's about 4,000 points for the Dow this week, which is it's unreal.
So it's been a very interesting lead into this. We saw, and we'll have a look in a moment, we saw copper come off really at the beginning of the month. Copper really started to move lower late January and early February, which became sort of the warning sign that there was something wrong as news came out about this health epidemic. But then all of a sudden, as everyone knows, suddenly this week the market's just tipped over. And what's more interesting, it's really the Western markets that have tipped over. We could take a look at the Hang Seng and the Chinese Composite, and they really haven't reacted as we have over the past week. So clearly, it's a global growth situation the market is factoring in. And I think that when we look at these types of movements in the market, particularly, and I'm very much a Dow theory type of person, but when we look at these types of movements in the market, at times there's no technical explanation when there's panic in the room. So we have a very strong indication that the market is selling the rumor until the facts come through. So. But it has a lot of stocks and a lot of indices have met some very, very interesting technical levels. And I would argue that the market is still, in one sense, technically structured. And we'll take a look at the Dow. And I think you can see the S&P 500 on the screen now. I've got marked up. So with that, we can get going.
Yeah, it sounds great. Getting into the S&P, one of the theories, and if you're a technical analyst, there's nothing more frightening than a fundamental-based or a fear-based move in the market because you don't really know what's going to happen. And the VIX is way up. The fear index, as they call it, is way up.
Yes.
And that's frightening because, again, when you rely on these technical levels and these technical indicators, when it's just fear driven, there's really no telling what it's going to do. Now, one of the theories that I heard was that the fact that basically China has been pretty much shut down for
Yes.
3 months. Their industrials have been shut down for 3 months. And we're actually just now catching the ripple effects. What do you feel about that?
Yes, I think there's a bit in that as China really started to close down basically cities, and workers were displaced, and a lot of particularly metal manufacturers or metal refiners haven't come back online out of this because they really don't know where their staff are, is what's being reported. So and I think where this is going now is just, from a Chinese point of view, it would seem like it's going to take a little while to restart that process again, and it will get restarted, but it's going to take a little while to undo the travel restrictions and undo get their workforce back to work, basically. Mm-hmm. And that could literally take months, as fast as the Chinese do work, but this could literally take months. So what we're looking for now in all of this, we've seen reported this week that the Chinese are now reporting a decreasing number of cases coming forward. So it seems like their methodology is working, of confining areas and restricting travel. It seems like that is working. But now we're dealing with the fallout. As everyone knows, we're dealing with the fallout of that, of people who have travelled overseas. And those the various health authorities around the world are now dealing with that, including Australia.
Mm-hmm. Yeah, and as it spreads, actually, Jeff Gibby here, he and I were having a conversation a little bit earlier about the drastic move that we've had in the market just over the last 5 days. In the U.S., we only have 57 or 60 some odd cases of the virus, and I guess the concern is what happens if a major city like a New York or Los Angeles starts, the virus catches on and suddenly thousands of people, what happens to the market then?
Yes, that's right. And that's, I think, where my view, and I stress this as my view with this is the market has sold the rumour, if you like, at the moment. There are no real facts around this on a global basis, and what we may see next is some company failures or a bank failure, or we'll start to see the economic effects start to spring up as companies struggle to deal with this. And we saw just this week a number of companies have closed or restricted their offices inside China, including Apple and Starbucks. And Starbucks came out today and said, well, look, we're starting to now reopen a few of our branches within China. So, but it'll take time to unwind all of this. But I'm quite concerned that we'll see some consolidation in these markets around these prices. The damage has been done now. We'll see some consolidation, and if we get any further systemic failure in the banking industry, in the industrials area, then the market will assess that very, very quickly.
Yeah, I definitely agree with that. What's kind of weird about this downturn is the fact that not only are stocks down significantly, but gold, silver, copper, they're all down as well.
Yes.
Normally they kind of move in opposition.
Yes.
And in this case, and I had not, you kind of answered my question a little bit earlier, but by saying that these metal factories are actually closed down, that's part of the reason that, we're seeing falling prices in gold, silver, and copper as well. Is that correct?
Yes. In the bigger picture in gold, we saw the run in gold out to 1690, 1610, I should say, and 90 cents. But we've seen now a broad sell-off of basically everything. Now, the bigger picture inside gold, of course, is last year central banks, including China, were buying a considerable amount of gold. Now buying has slowed in 2020. It is not, and we're also seeing the jewelry market within China and India slow as well. So it's a natural part of the natural gold cycle anyway, but this on top of it, I think, has exasperated the moves. It seems like there's risk off everything. Now, the interesting thing about this is a lot of gold traders will argue, well, we're buying gold in the face of a potential end of civilization as we know it, but the gold chart doesn't actually reflect that.
Right.
Gold chart's quite a good technical chart, and it just doesn't reflect that. So the gold buyers have they're waiting for the collapse of essentially US dollar or dollar denominated assets. That's why they're buying gold, but they've been thrown a lifeline in one sense with this health epidemic, and they're still waiting for the original cause. I don't buy any of that. As an analyst, I don't buy any of that. I think the charts rule over this, and they're only a reflection of what the buyers and sellers are doing, and here we are selling everything.
Yeah, and I think that one of the scary parts when we start looking at the Dow or when we start looking at the S&P is the fact that this has all happened within a week. 5 days. We have lost. We have gone through so many different resistance, or rather support lines. So I guess my question to you is, we're all kind of waiting for consolidation, and we're waiting for some, at least this week we're waiting for some sort of little sign of a bounce, and we literally never got one. So what are we looking for here next week in these charts?
Well, certainly we saw at the end of this week it's either a short cover or a little bit of confidence coming back into the market. We saw the markets, the S&P, I think you can see that on your screen at the moment, has closed off its lows. This is the weekly chart I've got up here. Has closed off its lows, and it's closed above that 2940 level at this point. So I think these support levels are being adhered to, and I agree with you when we look at the daily chart. For example, if I bring in the daily chart of the S&P, we can see that the close today has been at the high of the range down here, and so that would, in my view, from a technical perspective, it's not the reversal that we're looking for, but it is the highest probability that we'll see. If we see a gap up on Monday, then you've really got an island base set in the chart, and you may see a little bit of recovery. We can see in this chart here, there's been a number of gaps left open. This one down in here, which was back in October, there was a small gap left open. Now we've come in and closed that. Now what concerns me, if we see any further systemic failure, is we'll see this gap back down here at 2750 closed off in any further price movement down. Now I've got the relative strength on here as well. We can see that in the top of the market, this has been, I write about the S&P 500 every week in another report, and it has confounded me how it has moved continually higher in the face of all these reversal signals that have propped up. And we saw in the run up to the top up here significant divergence between the relative strength and the stock price itself, and we saw a little bit of a sell-off back to a support level of 3200, and then again we saw a new high put in. I've marked off here, there was an evening star formed. It failed, the market simply went higher. And there was really no indication in the tops here apart from the small ranges, the small daily ranges and the cluster of daily ranges that the reversal has come out of that, and of course then the gaps away. But the relative strength down here has failed on each new high. So it was really, it was coming, but I can tell you no one expected, including myself, I would never have expected a movement that we saw this week. We can see now that the relative strength is, I've made a note here, the relative strength is the lowest since 2015. So it is clearly, so term oversold. I would like to see this swing above the 30 level and a gap up on Monday to say, well, look, yes, we've got a short term or a base in at this point in time. But I would keep my mind open to the fact that there is another gap in the chart down here at 27.50. That's the concern with this. So consolidation here, I think, would be the highest probability, with the potential move lower on any further systemic failure within companies or financial system around there. Now, I see today Jerome Powell's come out and stated that they're willing to look at the cut in interest rates if that's required. Australian Central Bank has also indicated that same view. And of course, in this part of the world, the Australian government has now gone into emergency mode. They're prepared for any further health events around this, and they're also willing to step in and provide some economic support. So governments are going to do what they need to do, I think, in this case, to really support this and get us through it, because there will be a time when we do work our way out the other end of this. There's no doubt about that. We've seen a number of these with SARS and MERS and the swine flu. All of these have come and gone. This one is a little more aggressive, I agree, it would seem, but it will come and go.
I hope that it comes and goes very, very quickly.
Yeah. So in the weekly, I'll just move that across there. In the weekly S&P here, we saw really no indication of a reversal on a weekly basis either, apart from this developing divergence in the relative strength. I'm a very strong student of this divergence. I think it's one of the better observations in relative strength. Where we see the relative strength wander around above 50 or below 50, above 50 is nice if you want to be long. Below 50, you'll be looking to be short. But this type of divergence where we see the markets make new highs, but relative strength makes a lower high, I think is a very, very powerful indicator, including at the lows where we get divergence, bullish divergence at lows. So the relative, very, very good indicator. I'll get that away from there. There we go. So I'll just go on. I mentioned earlier, just take that off there. I mentioned earlier that we're looking at gold. I'll bring in my gold chart here. Gold, this is the weekly chart of gold. We can see the highs here. 1610.90 I referred to was broken this week. There was a bear flag formation after that, which actually failed. Some interesting statistics around flags and these types of patterns. Bulkowski's book on chart patterns is a very, very good read around that. But flags and these types of patterns have a fairly high failure rate. In this case, this bearish formation here after this fake out high, this bearish formation has failed to reverse the market, and we saw with the panic of prior week, a new high put in. But this week, what we can see is an outside range. We saw gold sell off last night, and silver as well, but an outside range on a weekly basis. This has an incredibly high statistic of marking turning points in markets. Now, I would point out back here in September, we had an outside range, a weekly outside range as well, and down in here, there was an outside range down close back in March as well. So it works the opposite way. When you see an outside range, like back in here in October last year, an outside range, but an up close, it has equally, and there's one here as well. So they're very, very strong indicators, because the market shows the market is confused. particularly when it closes down in that range. But it shows them the bulls are confused, the buyers are confused, and the sellers are confused about where this is going, and you end up with this large volatile range. So the weekly chart has now an outside range in there. We're starting to see the relative strength dip below 70. And it's also broadly set a series of lower highs here from back in August. So we have this divergence. Not a great example of divergence. I like to see it closer together than that, but we have this diverging RSI. Very good chance we'll see gold follow through a little lower next week, certainly back into this consolidation zone around 1560. I think would be an interesting support level. If we saw a close below 1560 next week, we'd just really pick a number. 1517 is my next support resistance level, and then ultimately 1450. Not sure 1450 is a go-to target at the moment. I'd like to see a bit of support around the $1,500 mark, 1517 mark, to see a little bit of support in that. So a big range this week. I think it's caught a lot of gold bulls on the wrong side of the market, and we may see some follow through on that. Now, I'll just bring in my silver chart. Silver paints, this is a daily chart of silver, and we can see silver paints a very different picture, very different chart than what gold looks like. So it really hasn't held the hand of gold as gold has traded higher. We saw the recent fake out here late last week, and then this week silver has simply sold off this week. It really didn't make a new high. Going forward, and we can see that their relative strength has well and truly below 50, and just tipped below 30 today on today's trading. So we're back at this 1650 support. That's our big support level. It's good to see it close above there, but the large range, when we see these large range movements like this is today's range, it generally ends up with a little bit of follow through excuse me, a little bit of follow through into the following days, and then you'll start to see some support around that. So I'll just close this up a little bit. This 1660, 1650 support level, very, very strong area in silver. So I would expect some form of consolidation around that price area.
Now, if we break down below that 1660, 1650 mark, would you say it's going to be a longer term sell-off?
I think there'll be a longer term consolidation. There's still we can see in here that silver has really consolidated since September last year, where it made the high, August, September, and has sold off, then had a bit of a rally and sold off again this week. So this, dare I say it, Hunter, that if we break below 1650, silver's going to enter a bear market move, or bear market phase, if you like. So, and it's going to have a lot of buyers on the wrong side of the metal, gold included, at risk of entering a bear market phase on a significant further breakdown here. So the evidence is not there to say that gold is going. A lot of people calling gold to the moon at the moment. The evidence is just not there this week. The ranges are too large. We're seeing, like for example, in silver here, we saw it trade out to basically $18.90, and here we are back at $16.50 within a week, and it's not a bull market retracement. It's just has a lot of people on the wrong side. A little bit of panic selling, of course. I think we saw today in the strong move down. But no, it's not indicating that the end of the world is coming just yet.
All right. Good. We've got another couple weeks on this silver chart. Yes. On the silver chart, I wanted to point out that you're talking about consolidation right around that 1650 mark in November of 2019. there was a lot of sideways movement. There was a lot of
Yes.
consolidation off of
Yes.
a 2 month move down of lower highs,
Yes.
basically.
Yes. Yes.
Do you feel like that's kind of what we're moving into now? We're going to go into this consolidation phase if we don't
Yes.
break that 1650 mark.
Yes, I do. I think it's a considerable support level. We have closed above there today, and I would like to see some form of consolidation here to say that we're not going lower, and that consolidation needs to close above 1650 on a daily basis to say that we're not going lower. If we saw it close below there, it certainly has these buyers in here in a losing position, and the market's based around your profit line, and people will take their stops and do what they need to do, and the short sellers will see an advantage in this and enter the market as well. So it's just, as I say, it just doesn't support this idea that silver's going to $50 an ounce or whatever they're calling it to be. I think there's more truth in the chart at the end of the day than there is in some of the reports.
Well, exactly, and we go back to that dynamic we were talking about a little bit earlier, and it's kind of a common dynamic that most people know, that if you're, I mean, it was even on late night TV commercials for a long time. If the market's going down, you want to get into gold, you want to get into silver. So that's kind of the knee jerk reaction. But then we look at the charts and we say, uh-oh, these are going down too. But again, it does go back to China shutting down, these factories shutting down. So aside from the mattress, where are we putting our money right now?
Well, I would suggest to you that the mattress is actually equivalent to negative interest rates, because you're paying your house insurance as well on there. That's fair. So yes, but if we take a look, what's more interesting here? Just let me get this one across here. If we take a look at the Hang Seng here, it has traded down into this close here yesterday or last night. It has reacted to the rest of the world, but there's nothing out of the ordinary around this chart except that it has come back to test support. Now, I've made a note here that I would be, as in the S&P 500, I would be looking for a gap up on next week to say that we've got a low in here. And it looks exactly like this over here, where we see this gap open on a daily basis. And then, of course, you need follow through. But we see that type of formation, this morning star type of formation, could easily occur as the world gets its thoughts together over the weekend. I think that once the news that's coming out now is it's been contained in China, as we said earlier, and I think once the world comes to grasp that the authorities really are doing everything that they can at this point in time to contain this, we may see a little bit of recovery in the markets. So the HSI is doing its thing there. The other one I wanted to bring out was the Chinese Composite, and this is so we've got now a weekly chart of the Chinese Composite, and we saw a bit of a sell down this week. I'll open this out a little bit, but really been in no man's land, if you like. This particular index, it seems to have disregarded everything. This gap in here is the coming back from the Chinese New Year holiday. We saw a gap down at that point, then simply rally up, and we saw a reversal again this week. So clearly it is a reversal, and I would expect this sort of 2750, 2700 area just to be checked again, and a break below that, simply puts 2450 back in line. But it is within this large trading range, and seems little concerned within itself about that. Now, one of the telling aspects of this market will come out tomorrow for you, today for us, will be the Chinese PMI. Now, the Chinese PMI There are a number of analysts calling that PMI number, the manufacturing PMI number, down to numbers like 35 and 36. Now, the Reuters poll has it at 46. Has been a little over 50 for the last most of 2019. So if we see a break below that 50 level, I think the market will assess that if it comes in at the Reuters poll number, I think that will be looked at as a positive. If it comes in as the guesstimates number of 35 into the world number, that will be very, very bad going forward in the markets.
Okay. And that's tomorrow, correct?
Yes, yes. Basically in a few hours' time, about 5 or 6 hours' time, I think that number is released.
No pressure.
And I think there'll be a lot of what have I done here? There'll be a lot of interest in that. Now, in our part of the world over here, Hunter, one of the better trades that has come through is this one here, which is the Australian gold price in Australian dollars. Been a fabulous run up in here, and this is the daily chart. Been a fabulous run up in this price. Australian dollar gold is trading at around 2,433 at the moment. It has put in a significant reversal on last night, along with the US dollar price gold. We saw the Australian dollar recover a little overnight. That will bring the our equivalent gold price down a little as well. But I can't see any reason why this simply wouldn't check this level down here around 2,380 in the coming days. Now, a large range bar often follows through, even if only for one bar, but a large range bar will often follow through. So 2,510 has been the big resistance level in this pricing. We saw the Australian gold miners really suffer yesterday. A number of gold mining stocks, the underlying stocks were down over 10% in the market yesterday. Yesterday's trading, and I think Monday will see them a little lower as well. I think they're apart from their own manufacturing issues and their own production issues, I should say. For example, Newcrest has one of our biggest gold miners has production issues as a Cadia mine around water and things. So we'll see, and that's been factored into their stock price. Even though the gold price has rallied higher, we've seen some of the gold miners under a lot of pressure. One of the better ones has been a company called Saracen, which was off 10%, even so yesterday. On there. So Australian dollar gold is looking pretty good for a little bit of consolidation here. I'll just bring in the Australian dollar. Just mention that we can see that the Australian dollar has remained under pressure for quite some time, basically since the December highs. I think last time you and I spoke, I said that the Australian dollar would probably have a look at 70 cents, and that's really what it's done up here. It's pushed into the 70-cent range and then failed out of that. Now that this daily chart, we can see a lower high, lower lows, and lower highs and lower lows, and now we have this exhaustion move. It looks to be an exhaustion move down below 64.5 last night, and then some recovery back above 65 cents. So I would, in this particular chart, I would be looking for a little consolidation now, because clearly the shorts have been covered and the buys have come in a little down here. And where the Australian dollar also is up against the fact that, as you know, we've had a lot of bushfires, natural disasters here in Australia over the December-January period. This is expected to bring our GDP down 0.25% potentially, and this has been factored in to our Australian dollar as well. We've had, on the upside of all of that, in the past 3 or 4 weeks, we've had significant rainfall across most of our agricultural areas now. And so we're going to see, I think, a little bit of recovery in the agricultural stocks that have been sold down in line with the rest of this week. But we'll also see a little bit of recovery in the Australian dollar based around that. So I'd be looking immediately, heads up on Monday, I'd be looking for a retest of this, and into next week, I should say, a retest of at least this 66 cent level up here as potential target. We can see the relative strength is oversold, and but a very good close in late trading this morning, or afternoon for you this morning here. Very good close into the range of the bar, so quite a good look around that for a potential long trade. And that's about me, I think. I've got, I would point out, along with the US VIX, we have a, that says VIX up here, but it's actually our Australian VIX is also had a significant move out here around our market. It is not as high historically as it has been in 2015, but certainly a very, very strong range in there. Now, with this type of volatility, I'm very much on the side of John Bollinger, where he says that low volatility leads to high volatility and high volatility leads to low volatility. So again, I think if we see calming of the markets next week, we'll see this reverse out of here fairly quickly. Back into this high range, 16s and 17s would be the first target on that as some stocks recover into next week.
Let's do this. Those of you who are watching on YouTube, type in your questions. Greg, I believe we have one or two questions off the bat here.
Not really. I think people might be a little gun shy to talk about this, I think, but there are a few comments I can share with you. Somebody just mentioned Monday is going to be insane. I'm curious if Gary has a comment about that. I should say that somebody is, Eric Shippen says, Monday will be crazy.
I think, when we get this is the beauty of when we, and I go take a step back here. The beauty of analysis, if you like, and based around Dow theory, the concept of Dow theory is that one of the concepts inside Dow theory is that we have an opening time and a closing time of our daily and weekly bars, and then, but it's the time in between. It's when everyone gets to assess the news and then make their decisions afresh again in the next opening session, and that's the construction of your chart. So I would suggest again that this weekend we'll probably see a little bit of calming down here, and I think we'll start to see opportunists come in and look for opportunities in particular sectors. For example, in the health sciences area, Gilead and some of the US health sciences companies have done rather well this week. In fact, Gilead made it onto my my pick list for Reuters just late last week. And we're seeing some support around those, and I think we'll see a little bit of we'll see a few opportunists come into the market at these points in time. And then of course there's the utility companies that just grind on anyway. So the telephone companies, the electric companies, that type of thing, we'll just see them continue on as they do. Now, in this part of the world, we have a number of dividends coming out this week, so we'll see stock held for receiving dividends and things. So I'm not calling the end of the world next week. If we see breaks of significant lows, yes, I'll reassess that view, but at this point, I think we'll see consolidation.
Okay. And one of the things I wanted to point out, some of the stocks that I've been looking at, have strictly just been driven down due to the fact that the Dow and the S&P has been pushed down so hard. Yep. But keeping in mind that a lot of times these smaller stocks, $20, $30, $40, $50 stocks, these are going to be the first ones that start pulling the larger groups up. They're going to be the easiest way for the opportunists to come in, the bulls to come in and say, you know what, we saw a little bit of a sign of consolidation in the Dow and the S&P. Let's start getting our money into these smaller cap stocks. So I think that there's a lot of opportunity next week, depending on what Dow does, what S&P does. I think that if we move sideways at all, if there's any consolidation, I think that we're really going to start seeing some pickup here.
Yep, I would agree with that. We'll see still the travel companies under pressure. I think we'll see particularly the cruise companies, airlines, the travel booking companies will remain under pressure. But this chart of Baidu in here, it really hasn't reflected anything other than, technical move as part of this end of this. On the right-hand side here, I've got the weekly chart. Let's open that out. We haven't seen anything untoward here in this particular price movement. We've seen a bit of weakening of the relative strength, but certainly in the background, this rounding base here would suggest that this is a bullish formation here on the right-hand side, and we may actually see this move higher in line with the market. So there's opportunity. If you're a long-side trader, there's a lot of opportunity around now to tip your toe into the market, if you like, or take small positions ahead of large positions in the market. But there's a number of charts that still look very, very good.
Definitely, and they're hard to find, but they're definitely findable. I use a page in Zenith called Movers, and it shows new highs versus new lows. There were still 150 some odd new highs. There was about 2,200 new lows, but still there are stocks that are barely affected by all of this. I'd definitely be looking into those. But also this is going to provide a really unique opportunity for a lot of people to get into some smaller cap stocks that have been highly affected.
Yes, yes, that's right. So this guy here, Dollar Tree, sold off, and last night put in essentially a textbook reversal candle. The weekly chart over here on the right-hand side hasn't made a new low from late 2018, early 2019, hasn't broken that low. This could easily turn into a morning star formation with a gap up on Monday as the markets calm themselves over the weekend. And we could look back next week and say, well, there was an buying opportunity here today. That's the risk you take as a trader and investor, is that you're looking. This is the opportunities that you look for in the market where we see these sell downs and reversal signals. Yeah,
very, very profitable possibilities. If you're a long side trader. Greg, did we have another question?
Yeah, well, we had a comment from a rabble-rouser named Jeffrey Gibby, who says he agrees with Gary. We finally seem to be stabilizing into the close today. Additionally, we have a question by Barton. He says, I think bonds are overbought. What are your thoughts?
Well, first off, Jeff Gibby, what does that guy know?
I don't know, right?
Secondly, Gary, do you think that bonds are overbought?
I think there's been a natural reaction into the bond market. And yes, now possibly they are overbought. It's interesting that there's been a reaction into the bond market, but out of the precious metals market, also considered a safe haven. But the bond market has certainly soaked up some cash in the last week. That will take a little bit of time to unwind as confidence comes back, but very good possibility that we'll see that bit of relief come out of that.
Wonderful. Greg, any other questions on that end?
No, I think our audience, like I said, is a little shell-shocked, maybe a little shy, not a lot of comments. But we do have some, thank you. Scott says this is very interesting. Mohammed, thank you. So a lot of people are
Scott, Mohammed, we do it. We do it for you guys.
Yeah.
In short, we're waiting for a little bit of consolidation. There's still plenty of stocks out there where there's quite a bit of opportunity, as well as stocks that haven't been affected as much by this ginormous pull down. So, get a bucket, put your hair out, everything's fine. We have at least another week before the world ends.
Yeah, I think so. I think so. But this, I just want to point out again, Hunter. From a trading point of view, this is our job now: is to find these opportunities in the market, to find the sectors and those most likely to recover first within the marketplace. So I would be a little cautious around transports and transports and airlines and booking companies, that type of thing. But on the upside, the reporting season in the US has gone reasonably well. Reporting season in Australia has gone reasonably well, and we're starting to now. A few dividends on this side of the world are coming out of the market, so the market will react to that. But I think there's opportunity here in the market at this point in time. And of course, keep your stops closer than your friends, and this is what we're looking for.
Yeah, exactly. I couldn't agree with you more. Essentially what we're doing as technical analysts is we hopefully got out of all of our long positions. I waited a little bit long, but finally got out of them.
Yeah.
Because every day you'd look at it and say, well, I mean, it's bound to be bouncing, right? It's bound to be bouncing, and it didn't. But
yes.
we get out of these long positions, we take a second, and I think this is, I agree with you here that this is what the majority of the market is going to do, is over the weekend, calm down, take a breath, and see where it opens up Monday, and do our job as technical analysts and say, okay, what are the key factors here? Let's look at these support and resistance lines. Let's look at the RSI and make an educated decision based off of that.
You make a decision around your trading plan, and you don't overextend yourself, don't overmargin yourself in the markets, and there's a huge opportunity here.
And hey, everything's half off right now, so that's great.
Yeah.
All right. Well, I think we're going to go ahead and wrap up with that. Gary, wonderful analysis. It's great to have you on again.
Thank you so much.
I value your input incredibly in especially in this type of market. So thank you for your time today.
All right. Thank you, Hunter. Thank you, everyone.
And for everyone out there in the audience, lots of great stuff still out there to trade. Be careful. It's been a pleasure. Let us know if you have any questions. You can get a hold of Gary at Gary. Gary, what's your contact info?
Email is burton.g, burton.g at Telstra, Telstra.com.
Wonderful. Feel free to get a hold of Gary if you have any questions. Like I said, we have one of his systems in Metastock called the Hooker method. It's really, really good.
And I'll be speaking at the Metastock conference in Sydney today.
Yes, and if you are close to Sydney, go check out the Metastock conference. If you go to metastock.com /
Sydney 2020.
Sydney 2020, you can get all the details there. Still plenty of time to register and head on down there. We'd love to see you. Other than that, everyone in the audience, stay safe out there. Thanks for joining us today, and as always, happy trading.
Thank you. Half today, but I've prepared and it'll be fun.